My name is Pat Foley. I'm with Robert W. Baird. I want to thank everybody for coming. We have a number of people who are here from Puerto Rico, and we have a number of Spanish-speaking people. So I just want to say to those people, bienvenidos, están en su casa. Estoy aprendiendo español, pero poco poco. And that's all I know right now, but I'm really working hard on it, and I hope, maybe in about a year's time, we'll see, maybe 2 years. I mentioned I'm with the firm of Robert W. Baird. We are a investment bank located in Milwaukee, and we have branches throughout the United States, also throughout the world. I'm part of a wealth management team called the Foley Group, and we are represented here by myself, Carlos Amador over there, my dad Mike Foley over there. A couple quick words about Baird, because we're not a household name over here. It's somewhat of an unusual, maybe old school firm in a way, in the sense that we are employee owned. And that impacts our ability to attract talent, of which we have quite a bit. We are rated by Fortune this year as the 9th best company to work for in America, and that is our 11th time on that list, and it helps us get some very good people. One more comment about the firm: we're known primarily for the strength of our equity research. We've been rated by professional money managers, mutual fund managers, in a study by Greenwich and Associates as the most trusted source of equity research on the street, and that goes back 11 years, so we're very, very proud of that. We are, I mentioned that we're wealth managers. We've partnered tonight with Fesnac, and that's Bob Fesnac over there, the principal of the firm, a accounting and also business consultant operation that we think of very, very highly. And we have a number of clients that we share. A number of our wealth management clients use their accounting services, and we collaborate. And it's actually a firm that we sought out. We kind of chased after them for a while to get a relationship, because they're very highly regarded amongst the business owner and private equity and sort of entrepreneur space, which is our bread and butter as well. So I want to thank Bob for partnering with us in this effort. With that in mind, we have invited two very knowledgeable speakers here tonight to talk about the tax incentives that are in place in Puerto Rico right now, both for businesses and for high net worth investors. First up is going to be Mara Meinhofer. She is the director of the New York office of the Puerto Rico Department of Economic Development and Commerce. And this is a government organization that is tasked with attracting capital and attracting business to the island of Puerto Rico. And they are very helpful in that regard. It's not just sort of advertising it, but it's being a guide to businesses that want to locate there. So she's going to give a very broad overview of the various tax incentives that are in place. We also are very pleased to have Carlos Serrano, who is a CPA and attorney and is a chair of the tax practice at Reichert and Escalera, based in San Juan. And it's a very prestigious firm with a lot of expertise in this area. Carlos, in addition to his current role, served as the Undersecretary for the Department of the Treasury in Puerto Rico, so he's got a strong background on the politics and the governmental side of things, in addition to the private practice side. So, our sense of this is that it is currently the most advantageous tax incentive or group of tax incentives that is available to U.S. investors. It's very unique, largely because of the unique relationship on a tax basis between the United States and Puerto Rico. I am not the expert on it, though, so I am going to bring Mara up for starters, and she's going to be able to start filling you in.
Thank you. Take this out.
Yeah, just
As a Puerto Rican, I like to move around and use my hands, and I can never be stuck in one place. So thanks for your interest in Puerto Rico, and thanks for the introduction. As he mentioned, I work for the government of Puerto Rico. very specifically with the Department of Economic Development and Commerce, and one of our roles is to raise awareness about the different opportunities that Puerto Rico offers as a business jurisdiction and as a tax-friendly jurisdiction. I'm just going to put into perspective so you guys know what's going on in Puerto Rico in terms of the business community, what's happening, what are the industries that we have, and what it is that we're doing right now to continue growing and promoting the economic development of Puerto Rico. And then Carlos is going to speak in detail about the very specific tax incentives that are catching everyone's attention and should catch everyone's attention today. Yes, so yeah, this is the agenda. Next one, please. Next. So just to give you an idea, perhaps you already know, these are some of the companies that are currently operating in Puerto Rico. As you can see, the main industry in Puerto Rico up until today is life sciences, pharma, manufacturing. So you can see all the big players here, Baxter, Lilly, Amgen, Pfizer, Merck, everyone's here, right? So basically with this, what we want to show you is that we already have a multinational base in Puerto Rico. We have the talent that have been helping these companies grow. And what we're doing right now is that the tax model that we created so that we could attract these companies in the manufacturing sector, all we are doing right now, we want to replicate that model into the services sector. So the next one, please. Yes. So very briefly, what we are doing in Puerto Rico, our economic development strategy is that we want to maintain the current industry, the manufacturing base that we have. We want to maintain that. Right now, that's still 45% of the GDP of Puerto Rico. But what we are doing, while we are strengthening and keeping that base of the industry, we want to move into a more diversified, knowledge-driven economy. So that's why the incentives that we are very actively and aggressively promoting right now are incentives related to the services sector. But then again, we're keeping the manufacturing, we keep recognizing the manufacturing and life sciences sector as the main sector in Puerto Rico. We still have tax incentives for them. We are just extending the tax incentives to the service industry. Yes, so basically this is what I have mentioned. We want to diversify. We don't want to keep all the eggs in the same basket, right? We've always been doing manufacturing and pharma. We want to diversify and to a knowledge-driven economy. These are the 4 strategies that I started mentioning. We're going to keep defending the anchor industries of Puerto Rico. Manufacturing is there to stay. We're going to keep addressing the manufacturing industry. Locally, we are stimulating local entrepreneurship. Very important, this is one of the things that we're doing here. We want to restore Puerto Rico's credibility as a stable, business-friendly jurisdiction. And again, we do this in different ways, but the main way is that we take full advantage of the relationship that we have with the United States and the fiscal autonomy that provides us. And Carla's going to speak a little bit more about that in detail later. So then again, if anyone doesn't know where Puerto Rico is. Okay, so our economic development strategy is based on 5 pillars. These are the 5 strengths that we have identified that Puerto Rico has. The first one is the workforce. Next one. So very important is that students in Puerto Rico, they are educated to U.S. standards. Okay, so not only they are educated. The previous one, please. Yes, educated to U.S. levels. It's a workforce fully bilingual, Spanish and English. We have very, very strong graduates, STEM graduates, science, technology, engineering, and manufacturing. And I was sharing this morning with the guys that what's happening is that our graduates, they're top of the notch talent. Again, they get educated by US standards. Because of Puerto Rico, the cost of the labor for this type of roles, professional roles, are 30 to 40% lower than the US. But what's happening is that US companies, they're taking the students and they're coming to the US to work because they're really high quality students. So what we want to bring them opportunities so that they stay home. They want to stay home, so we want to bring the opportunities so they don't have to leave. Next, please. Lower attrition than other outsourcing destinations. This is really, really important. Puerto Ricans, if they're happy, they want to stay home. If they have a job, they can pay the bills, they don't want to go anywhere else. So if we provide them the right opportunities, they're going to stay. And high cultural affinity to the US mainland. It's not only cultural. Our professional talent, because Puerto Rico is a US jurisdiction, they are trained to US standards, and they are All of them, depending on the sector, they're covered by the US regulations. So financial people, they take the same exams. If the doctors, everything is the same quality than in the United States. Next. What I was mentioning before is an average of 30% to 50% lower labor costs when compared to the United States. Okay, this comparison is with the US. Next. Okay, this is very important. And this is one of the things that we take most advantage of. Because we're not a state, because we're US territory, there are different advantages to that. So a company operating in Puerto Rico, it would still be remaining in US soil. Puerto Rico is US soil. And residents of Puerto Rico, Puerto Ricans are US citizens. There's no US passport required to go to visit Puerto Rico. It's the same as visiting any of the other states. Again, it's the US currency and the US banking system. All the regulations that apply in the US apply in Puerto Rico. So if this is something that is relevant to your business, then you can rest assured that the same regulations apply. So this is, for example, this is very important in pharma, right? So all the FDA regulations, etc., the same. We have the knowledge, the capacity, and the talent that have been working under that framework since forever. All the US legal protections, so the RP is protected, financial and regulatory framework. Companies operating, this is very interesting. Companies operating in Puerto Rico, they have access to federal fund and government contracts. So I'm just going to give you an example. So there's this company, maybe you know it, it's called Infosys. Infosys, they do consulting and outsourcing. They're a company from India, right? So Infosys, so they opened operations in Puerto Rico earlier this year, and they wanted to access and give services to the federal government, specifically to the military, right? So this type of contracts and some types of jobs, not only they have to be done in US soil, but some of these roles, they have to be done by US citizens, right? So now you have an Indian company just setting up a structure in Puerto Rico, hiring local talent in Puerto Rico. Now they have access to these federal contracts. So this is a big opportunity and then again, the cost of operating in Puerto Rico, I'm going to speak about it later, it's lower than the US. So if you want to do business to the US, if you want to have access to federal contracts and anything related to the US, Puerto Rico provides a very good entry point. I mentioned, intellectual property is protected by US laws, and this is what I was mentioning before, the ability to use the Made in USA label. Again, depends on the product, depends on the sector, maybe this is relevant for you, maybe it is not, but for those industries that is really relevant, Puerto Rico provides a very wide tax-friendly entry to marketing your products in the US, and the benefits of US trade agreements. Infrastructure, non-stop flights weekly, there's tons of flights, particular to the US, direct flights. So you have bilingual workforce, almost the Eastern is the same time zone, you have non-stop flights, so it's very, very, very accessible, right? Instead of having your call center in India, where you're dealing with currency issues, with cultural issues, language issues, time zone, and travel, you don't have that in Puerto Rico. Next, please. Again, we have global experience, like I mentioned in the first slide. We are home to countless worldwide corporations. We provide a gateway to the US and Latin America, and again, we are in the Eastern US time zone. Again, just to give you an idea, because our strongest sector has been medical devices, pharma, and manufacturing. So right now, 12 of the top 20 biotech and pharma companies, they have presence in the island, and we have the companies here. Next one, please. 7 of the world's 10 best-selling pharmaceutical products, they're manufactured in Puerto Rico. So it's a very big presence and solid workforce and talent. 13 of the world's top 20 medical device manufacturers, they have operations in Puerto Rico. Again, this is just an example of the companies that we have in the life science sector. Next one, please. These are new emerging sectors. We're seeing a lot of growth, again, in the services industry. We're seeing financial services, call centers, BPO, outsourcing, even aerospace. Next. Yes, next one. And that's it, I'm gonna make it short and sweet. So now, before I head it off to Carlos, just very general, high level. So we have fiscal autonomy at the state level. So as a government, we determine the taxes that we want to impose, and this is where the tax incentives come in. There is no federal income tax on certain income. You know what? I'm gonna leave this to Carlos. Yeah, I don't want to say things double. So that's my part. Now I'm gonna have Carlos speak more specifically about the tax incentives. Thank you.
I don't do the walk around. Let's set it up there. First of all, thank you. Thanks for coming. I mean, thanks for the invitation. This is stuff that truly I enjoy doing, talking about these programs on here. They are good, very good. What we want to do here is actually go into a little bit more detail. We're not going to go into really deep tax stuff at any point. But the items that you truly need to know if you're thinking seriously of taking advantage of these incentives. One thing that I always stress to people, you're going into a tax advantage jurisdiction at any given point, the first thing that you need to make sure you have is a good business, profitable, where taxes is an issue, okay? So we have to assume that. Because it's a tax advantage that you're looking at. We'll discuss a little bit of Puerto Rico, the tax status, exactly how it is that this works, why it works. Then Act 20 and Act 22. Those are the two principal components of what the government is trying to foster to come into the island. As Mara said, we have a legacy of the, used to be the 936 corporations, when the farm operations got in. They have a huge footprint over there. They're very well invested on the island. They are solid. Some of those industries, particularly the medical device sector, is growing. Pharma, they have their own issues with the product lines, bless you. But it is still strong. My bread and butter is with tax incentives, proper, typically manufacturing or tourism. Then we'll discuss some of the items of the residency in Puerto Rico. Residency in Puerto Rico is an issue only with Act 22, which is the act that is geared towards getting people to move on island, and it provides some incentives if you actually move there. You don't need to do it. You can actually take advantage of what's out there to actually create wealth as a business and keep it in Puerto Rico and grow it with a really favorable tax scenario, as has been done for the past 40, 50 years down on the island. There's an added bonus for individuals particularly, where Act 22 may come into play, and it may be a very, very good alternative as an individual to actually take some of the wealth out of a business or enjoy some of the profits of assets that you may have. So let's, with incentives programs down there, and some of the questions that we get, which are very fair questions, as Pat mentioned, I worked at Treasury, the Treasury Department between 05 and 08. I was in private practice before, then I obviously came into private practice again afterwards. In 04, the Jobs Act was enacted. Okay, when that happened, there was a provision. We'll talk about it precisely because of the residency issues. Section 937 of the U.S. Code was added at that time, and some regs came out in 2005, precisely to deal with how the U.S. will treat a person that claimed to be a resident in a possession. Puerto Rico, the USVI, Northern Mariana Islands, Guam, we're under the code possessions proper. And it was sort of intended to avoid what they perceive to be abusive practices. Okay, there are rules that are out there, which is good because you have really solid guidance, and they were intended to sort of curtail a program run by the USVI at that time, which is still going. That system is going under a different set of rules. People, because of that, ask, I mean, would that happen to Puerto Rico at some point? I mean, is it going down the same path? I truly believe it wouldn't, particularly because of the experience we have. One, there's a huge difference in taxation, the leeway that Puerto Rico has versus the USVI in terms of taxation. The USVI will actually use a US code and mirror read it for the jurisdiction. We have our own code. It's a completely different tax regime altogether. It's more akin to international. That's something that I would stress to a lot of people. You're going into Puerto Rico for tax reasons, you're going international. You need to be aware of that because there's a clear border in taxation at that point. Within that frame, we've had incentives in Puerto Rico for the past 50 years. Manufacturing operations in Puerto Rico started with an act in 1947. That's when the bigger pharma companies started to move in. That's when we had the Section 936 companies go in, which was a sort of a tax sparing mechanism to create jobs on the island. That legislation was initially, most of these pieces of legislation have sunset provisions. They're temporary. Except for Act 73 of 2008, which I assisted in the drafting and made sure that we didn't have a sunset provision on it. All of the previous legislations were supposed to expire 10 years after their effectiveness. And they just get another one, another one, and another one. So it's a really long tradition of setting this up. For the tourism company, we have had incentives very similar, some particularities within it because it's the tourism industry is more leveraged. There are credits, investment credits built into that legislation that you can actually cash out and use as part of your investment money for a tourism project. Film industry legislation, again, it's going really good. The 2010 legislation is really generous. It provides a credit. That's a credit mechanism. It's an income tax credit that you generate based on your investment in Puerto Rico. You can monetize it. There's a huge market, really solid and stable market to sell the tax credits on the island and cash them out. Then we obviously have the Export Services and the Individual Investors Act. With the Export Services, which is Act 20, I just wanted to highlight, this is, Act 20 is new, but the concept of having export services in Puerto Rico started with Act 8 in 1987. So that is absolutely not new. So again, there's experience on how to manage that on the island. Puerto Rico, because it is a foreign jurisdiction, again, we're international, you need to see exactly what happens from a U.S. perspective. We're obviously, U.S. Here. From a U.S. perspective, with respect to foreign corporations, if you're setting up a business as a foreign corporation, the U.S. will tax a foreign corporation only, or typically only, in U.S. source income that it would generate. So it would be income for a trade or business within the U.S. Since Puerto Rico is not the U.S. for tax purposes, you can have a foreign corporation being set up in Puerto Rico and not have it taxed currently by the U.S. It can be a Puerto Rico corporation, it can be a corporation from any other jurisdiction doing business in Puerto Rico. And when I say corporations, it's entities, legal entities. It can be an LLC, whatever. But you could have it, and whatever happens in terms of revenue generation over there would go untaxed by the U.S. There are some caveats to that. We'll get into that. And again, those caveats are huge in terms of having to deal with them CFC issues that are international in context. Nothing unsurmountable, just knowing exactly how to manage it. With respect to individuals, the U.S. will tax individuals on a worldwide basis. So then there's sort of like a discrepancy in terms of corporations. What happens if you are a U.S. individual living in Puerto Rico? The U.S. Code provides an exemption to that, Section 933. This is U.S. Code legislation. It says that if you are a bona fide resident of Puerto Rico, you will go untaxed by the U.S. on your Puerto Rico source income. Okay? And that's what happens, for example, myself. On my income from Puerto Rico, I don't pay U.S. taxes. Investments that I have in the U.S., I do pay U.S. taxes, and I file a return for that. So that is available, and that has nothing to do with Puerto Rican legislation. That is the status that we've had for years, many years. When I mentioned some of the caveats with the corporations, and this is something that if you're following probably not. So the tax discussion on international taxation, the issues with the Googles and the Microsofts and whether they're in Ireland, abusing the system and maintaining cash offshore for an inordinate amount of time. The issue is regarding the use of corporations, because as I mentioned before, so when you have a foreign corporation doing business, let's say Puerto Rico particularly, that income will go untaxed in the US generally, unless you bring it over to the US when it's going to be taxable at that point, and there are several mechanisms within the US code to try to tax it currently over there. So particularly if you have what's called a controlled foreign corporation, a CFC, there are some provisions built into that to tax you currently on the revenues of that company. That is not the normal situation if you have an active business on the island and you're able to accrue the benefits in there. The catch is, which is the reason why many multinational companies do this, you just need to keep the cash outside of the US. So you can generate the cash in a low tax jurisdiction, use it to fund expansion plans in other parts of the world, and at some point, yes, you'll get taxed not only in the US, but you get to choose when at that point. That's pretty much, the little timing that goes into that. In the case of individuals, there's a slight difference in there, which is good as an advantage. If you receive qualified dividend income from a US perspective, you get to tax it as capital gains. And that is good because you may be a US individual having a corporation in Puerto Rico accruing its income and generating profits that are taxed really low. We'll see some examples of it, that are taxed really low in Puerto Rico. And when you get a dividend distribution out of the company, because it is a corporation, you need to have a possessions corporation. So in that case, you would choose to have a Puerto Rico corporation to do this. You will get favorable rates, 0, 15, 20, it all depends on the rate that applies to you, but it will be treated as capital gains. So yes, there is a possibility to actually generate a lot of savings if you are an individual running the business. That may not be available within a whole structure of corporations because of the CFC issues that we talked about. So let's go with that into the Act 20 scenario. Again, Act 20 is the Export Services Act. It's intended to have, we'll show you a listing of the services that are covered by that. But what it does is that it grants you that you set up a business. Let's assume that you set up a corporation or an LLC taxed as a corporation in Puerto Rico to render one of the businesses or to perform one of the activities that are included in there that will generate exempt income in Puerto Rico. That exempt income, it's not fully exempt, it will be generally taxed at 4%. So that'll be the income taxation that you'll generate from that business. We'll go into the types of business that can profit from that. You could take it down to 3%. That's in certain cases. You need to have 90% of the business of that entity being the type of generating the type of revenue that is exempt, because you can have a mix of activities that are not covered and activities that are covered. And it needs to be what they call strategic services. So it's you need to perform very particular services. In addition to the 4%, you have 100% exemption on distributions, and that covers dividends or partnership distributions. Assuming that you're doing or trying to take advantage of the qualified dividends, you would have a corporation running a business out there, generating revenues that are going to be taxed at 4%, so you get 96% of that income ready to be distributed. And then if you distribute it to individuals that can get it taxed at capital gains rates, you're saving a lot versus not having the system. So there is, 4% will not be, we're going to send out the presentation afterwards via email if you'd like. You can get that. So there's a mix between that. You have to plan the whole thing out, but in terms of expectations, 4% is part of what's going to be your total tax. You need to do a mixing and matching of it. It's typically blended. But that is very important. Otherwise, if you're not in the incentives program, there will be a withholding tax on the distributions, 10% withholding tax on the dividend distributions. In terms of local taxes, there's exemption for property taxes that applies to 3 types of businesses within the program they have. That goes for the headquarters, for the call centers and shared services components. You'll see there's a whole wider range of activities that you can perform. As well as 60% exemption, we have a gross receipt tax out there. It's a 0.5 percentage point generally on the gross of a business. You'll get exempted from that. And you get a tax grant. And a tax grant is literally a contract between you and the government stating exactly the rights that you have as a grantee operating on the island. That'll sort of guarantee that you're gonna maintain that. And truly, I mean, the grant system has worked. It's been working for the pharma companies for half a century already. You can extend it for 10 years more. These are the eligible services. We're gonna furnish you the presentation. You'll have them. You'll see the listing in there. But as you'll see, almost everything is covered in there. Some of the items that are there and are there by design are activities that some other sectors on the island are going to benefit from. For example, R&D components. You have advertising, public relations, consulting services for any trade or business. Accounting is there. Centralized managerial services. I highlight those because those are getting to be the most popular ones down in the island. You have services such as legal, but not the type of legal service that I render on island. I would need to be rendering services, legal services, for example, on Pennsylvania law from Puerto Rico. So you need to render the service from the island for a market that has no nexus with Puerto Rico, okay? But it is available if you want it to. Telecommunications, shared services centers, medical and hospital services. We've been talking quite some time about radiologists, for example, where you can read and do your services, perform them from Puerto Rico, and you're actually rendering the services to whichever facility in the world that you want to render it to, and you can do it from the beach and generate excellent income. The list goes on, and then there's the investment banking and other financial services, and that's being highly popularized. You'll see there's a small video that you'll see afterwards, some of the people that are actually taking advantage of this. This is very interesting because it's highly mobile. So there's a lot of people that are setting up at least some part of their operations on the island, servicing some of the investment managing down there, and it's very, very popular. Most of the interest that we've had is with that sector of services. Yeah, this is a short example of how this works, and I put some movement to the whole thing. No, but you're not. No, let's assume no. You need to go back. Let's assume you're a U.S. investor, and I'm talking here. Let's assume an individual, because this is the scenario where you can actually have the cash. If you're doing corporate scenarios here, you're talking multinational, because you are better off not taking the cash back to the U.S. So you need to have a use for that cash elsewhere. Okay, so that's a caveat right there. But assuming an individual sets up a business in Puerto Rico, it'll be a corporation, you set up in Puerto Rico. The services that entity needs to perform are for markets that are outside of Puerto Rico. Here you go, the services outside of Puerto Rico. They call that the export of the services right there. So it's gotta be, again, no nexus. That is a new concept in this legislation, but it's stuff that has no nexus with Puerto Rico. You can have, for example, set up a business in Puerto Rico doing the back office services for your operations down here. There's plenty of cases of that happening, setting up shared services activities, accounting, bookkeeping, loan servicing, sending out all of the paperwork related to the financing and the loans. And you're turning right there, either having a straight business that you can use in there, and expand within the U.S. or anywhere in the world except Puerto Rico. Truth is, you can actually do it in Puerto Rico. It's only going to be fully taxed by Puerto Rican standards. So it's not covered by the program. If the mix is right, still, you're doing out really well. So again, you're looking to have a really good business. This is not, I mean, I'm a tax guy, and I'm the first guy to say it is not all tax. I mean, you need to have a good business first, and then you worry about the taxes on it. Or you can use it to expand over in the US. The thing is, you're going to be accumulating in Puerto Rico the profits from that business. Once that happens, you need to take the profits out, and assuming that you need to take them to the US, and it is an individual, this is the way that would look like in terms of return. There you go. Assuming that you have net profits in Puerto Rico of $1 million from that operation, and I'm assuming that this is 100% revenues generated from the services that are being rendered to the US customers. It could be affiliates. You could turn a cost center in the US into a profit center in Puerto Rico and share those services for a group of entities, or one entity. You would get taxed 4% by Puerto Rico. That 4%, that's at $40,000. It keeps you with $960,000 worth of distributable cash that you have in Puerto Rico. There will be no withholding taxes on that stream of income going over to the US. Again, typically it would be 10% if you were not in the program. And if you get taxed in the US, assuming that you were taxed at capital gains rate, and even assuming 20% of capital gains rate on that revenue stream, you're still being taxed at 23.2% on that operation. It's not 4, but it's really good. It goes down substantially. So that's a typical scenario that you may see with a private business moving on island, having an individual investor on site. I think that we're good. So we'll talk about the individual investor side. The first thing, again, this is sort of a tag along or addition in addition to the Act 20 provisions that are out there. This example that I showed you, you don't even need to move to Puerto Rico. You're actually generating some services over there by moving the operation into Puerto Rico, not moving yourself. However, if you moved to Puerto Rico, there may be some additional advantages. One, and this is absolutely unrelated to Act 22, if you were a bona fide resident of Puerto Rico, getting the dividend distribution out of that corporation in the previous example, just by virtue of Section 933, you would go untaxed because you would be receiving a distribution of Puerto Rico source income from that entity that Puerto Rico will not tax it because of the Act 20 incentives, and you get to keep it exempt. So it's huge, even without Act 22. Act 22 was enacted, and this is completely new. This started in 2012. It was enacted to go a little bit beyond that. This does not change anything in the relationship between Puerto Rico and the U.S. It just simply, it's a voluntary ceasing of taxation by Puerto Rico on some residents. So what it does is, if you are a person that did not live in Puerto Rico as a bona fide resident for the 15 years preceding the enactment of the law, so I'm not in that group by any means at that point, you become a resident of Puerto Rico, the program expires or is set to expire right now by 2035, you move into Puerto Rico and you get exemption, additional exemption, because Puerto Rico will simply forego it on certain types of income until December 31st of 2035. That's the sunsetting of the legislation. You'll get 100% exemption on income from interest and it's typically passive, interest and dividends from all sources, and 100% exemption on long-term capital gains. There's a couple of catches on the long-term capital gains portion of it. And again, you need to make sure that this is Puerto Rico source income, because you want to have it untaxed by the US and then you have it untaxed here. And there's a couple of plays on how to do that. In the case of the capital gains, there's again a couple of catches. If you move to Puerto Rico, you change residency, we were talking about that before, there's a 10-year period where you would be taxed by the US on the capital gains that you're having on an asset that you moved to Puerto Rico. So what you have is, you have like built-in gains. If you have an asset, for example, that's worth 100, actually I have an example afterwards, but if it's worth 100 on the time, at the time that you moved, that piece of profit, of gain, will be taxed by the US. What Puerto Rico does there is a little tax it as well. So you'll pay a tax to Puerto Rico at the regular rates in Puerto Rico, which is 15% now, and then you'll pay a tax to the US. You'll credit the Puerto Rican taxes to the US, so each gets a little bit of a piece of that taxation that was gonna happen anyway. Then after, so if you have net gains, if you have gains accrued, I mean, in the property above that period when you move, that'll go on tax by Puerto Rico and that'll go on tax by the US. After the 10-year program of 10 years have lapsed, Puerto Rico will get a chunk of that anyway. They'll get 5%, that's by statute right there. But you have, I mean, reduced taxes on capital gains, on a big part of the capital gains, at any given point with the legislation. So there's a couple of issues in being a resident of Puerto Rico. And there's a couple of questions that we've already had here. You need to look at it from two perspectives. One is from Puerto Rico, the other one is from the US. The tests that are there on the US side here, those are the ones that got introduced in 2004 and 2005, precisely to make sure that there were some guidelines in there to determine when you are not a US tax person, okay? So from a Puerto Rican perspective, our test is domicile. That's highly subjective. That is an issue of whether you actually live there. It goes more to the closer connection requirement from the US standard. But we have that domicile concept, and there is a presumption that you're domiciled in Puerto Rico for tax purposes if you've been there for 183 days. It is not a magical 183, it's a presumption. You may be there 180, you may be there 170, you may be there something less, and you would have to prove it. At some point, it's simply not presumed, but it doesn't shut the door down completely. From a US tax perspective, that's a little bit different, because you have three tests to meet: a presence requirement, a tax home requirement, and a closer connection requirement. And you need to work with those tests in order to make sure, not that you don't fail from a Puerto Rican incentives perspective. The issue is not getting taxed by the US as well. If something like that were to happen, where there would be a clash, a potential for double taxation between the US and Puerto Rico, what we actually did, and this is when I was in Treasury back in 2005, when the regs got enacted, there is what is called a mutual agreement process. It's very similar to a competent authority proceeding if you have companies working with treaty nations, where if you have the potential of being double taxed, you get them to fight it out. It's their dollar. You're supposed to be taxed once, not be double taxed. So they need to fight it out. And the process has been set where Puerto Rico can actually draw a line on the sand and say, no, this is my resident over here, and continue to have it. You would need to prove domicile, etc. But that's a fight that at least you're going to have someone else on the table discussing that issue with you. The present test, it's got four, there are clear guidelines on when to determine that you have been present at the jurisdiction or the possession. This applies to other than Puerto Rico. But the first one, you need to be present for at least 549 days during the 3-year period that includes the tax year and 2 immediately preceding tax years. That is a objective test. You need to be present in the US no more than 90 days during the tax year, but there's some ors. So you may fail that one, but meet the first one. You make no more than $3,000 of US earned income, you'll probably fail that one as well. And you have no significant connection to the US during the tax year. That's where it gets subjective again. So there's a lot of subjectivity to some of these sort of presence tests. And it's happened to me, and probably some of you have the same questions. Some of the first questions that I've had in the process, someone trying to move, saying, yeah, I'm gonna move over there, but is it okay if I keep my wife and kids at home, actually, they say at home, while I moved my home over to Puerto Rico? don't think so. I don't think it's going to work. Again, it starts with bona fide, the whole thing, so you need to make sure that it does work out. So that's one of the tests. Then you have the tax home test, which is saying so you have no tax home outside of Puerto Rico during the tax year. So if you move to Puerto Rico and you want to be a bona fide resident of Puerto Rico, that needs to be your tax home. You're going to claim to be there. You're going to live as if you are a resident of Puerto Rico. Really, having no tax home there is saying that if you're moving from Puerto Rico on business, and that is a U.S. test, if you're moving from Puerto Rico on business, you would get a deduction on that travel because it is your home. And then the closer connection test, which is it's great, which is you have no closer connection to the U.S. or any foreign country. That's where traveling all over the place. I mean, it's not that you cannot be X amount of days outside of Puerto Rico and outside of the U.S., but the closer connection has to be to Puerto Rico. There's a lot of subjectivity to that test as well, and there's that is actually from the regs. Maintaining more significant contacts, the permanent home, family, personal belongings. Mara gave me an example last night on a nice question to ask yourself. I mean, where do you keep your nice bag of golf clubs? That may be your home. That may be your home right there. So again, it's political contacts. Where do you vote? Which license do you hold? Where do your kids go to school? What church do you go to? So that goes into truly more of like the domicile aspect to begin with. Originally, we were domiciled in both jurisdictions. This changed, but again, you can be as objective as you can, but there's always going to be some subjectivity to the whole thing. And I cannot stress more. So the issue there is making sure that you don't have that tax home in the U.S. That's key. That's number one. So protect that piece. Puerto Rico will help you out on the other end because it's an easier test. It's more subjective than anything else. Then there's some issues on the year of the move, and a lot of people sort of say you got to plan it out. So you got to plan it out to make sure that the year of the move you actually get it honored. That's the year that you're going to have the tests on the assets that you're moving. If you're moving any assets to Puerto Rico, that'll be your first year of revenues that are there. The issue with the year of the move, more than anything, is that at the third point there is a look back period. You may have failed to meet the bona fide residency requirement on that year at the third year afterwards. So you need to make sure that you actually plan out that year of the move and maintain that status. It's not that you need to be there for 3 years, it's that you may fail that first year. And if you moved in June, for example, and you were claiming to be a resident during that tax year, those 6 months may go down the drain because of something you did 2.5 years afterwards. Okay, but it's that piece, not the rest of it. So this is an example of what happens with the built-in gains on an asset that you moved to Puerto Rico and the issue of the 10-year period. So you have built-in gains on property that is being moved to Puerto Rico, a portfolio. You moved it. You have a built-in gain, assuming, for example, that you bought stock in a publicly traded corporation. You bought it at $40. That year, when you moved, it's worth $100. It's easy to determine. Right there, you have $60 of built-in gain. Those are the $60 that are going to be subject to U.S. taxation for that 10-year period when you sell them. You may have some appreciation over that. During the span of the planning, and in this example, by 2018, that stock was worth $200. So you have $60 of the built-in gain that is, let's say, tainted, and then $100 of the additional gain while you were a resident of Puerto Rico. What would happen if you sell that property is that you would have, so within the 10-year period, you would have a gain of $60 for U.S. tax purposes, and you would have a gain in Puerto Rico of $60 as well, because Puerto Rico will forego and exclude taxation on the second piece of appreciation, on the $100 that appreciated while you were a resident of Puerto Rico. So assuming you get taxed by the U.S. at 20%, you would owe $12 of tax to the US. The thing is, you will be taxed by Puerto Rico at 15% as well. So you would owe Puerto Rico $9. You're not supposed to get double tax. So you will credit those $9 over to the 12 in the US. The US gets 3, Puerto Rico gets 9. It's an issue of to whom you got the checks. You will be controlled by some taxation. You will always be controlled by the highest tax rate or the highest taxation on it. But the end result would be that you paid $12 of tax on that piece of on that asset, the gain on that asset. But as you see, the second amount of appreciation went untaxed. So there is a lot of benefit to that anyway. I don't remember what I put that example for. Just put it again. Yeah, that was it. I think that was my mistake over there. Exactly. But that's, in a nutshell, that's pretty much what's out there. Again, so takeaways for the whole thing. There is an incentive program that's been out there for a lot of time. Most of the components of this program are US driven. So there's simply exemptions that are out there in the US code that allow this to happen. This is not a loophole in the system. This is, everything has been out in the open for X amount of years. I've built a career working with those incentives myself. There's some nuances to the whole thing, but done right, yes, there is a potential that is legal to shift some operations over to Puerto Rico, be them shift operations in the services component or any other a line of business that is driven by incentives, and you can accrue value down there. The issue is how to tap into that value afterwards. And that's where, in the case of an individual, Act 22 may come into play, or the issue of residency in Puerto Rico, because again, even without Act 22, by meeting the residency requirements over there, you're able to get the dividend distributions from a business tax-free. And this is situations that I've seen with some clients as well. One shareholder of the business would move to Puerto Rico, not the other ones. Fine, you can do that. So you can do that. That person that moved into Puerto Rico, being a bona fide resident of Puerto Rico, it's exactly as if I own shares of stock in one of the Pfizer companies that operate there. As soon as they declare a distribution, it's tax-free. Dividends in the hand of a bona fide resident of Puerto Rico. So that's pretty much it. I assume we'll get some questions if you have them. No. Hang on. Mara has a nice video over there.
Then the questions.
Then the questions.
So the video that we're going to play, it's a video that was done by Bloomberg TV that came to Puerto Rico to get more information about the tax incentives. So this is not a promotional video by the Puerto Rico government, it's a video by Bloomberg TV. Let's see if it works.
Nick Crowdy is betting on Trump to Puerto Rico. He's not only making significant investments on the island, he's moved his office and family from Connecticut to San Juan.
Last year, I think I spent about 10 or 15 days outside of Puerto Rico. We're all in. We're not going home on the weekend.
To attract investors like Crowdy, the Puerto Rican government created Acts 20 and 22, which offer tax exemptions to businesses that export their services from Puerto Rico to outside markets, to individuals who relocate to the island. The government forecasts that 250 individual investors will apply for the Act 22 program in 2014.
My phone rings at this point, 3 or 4 times a week with people wanting to know a little bit more.
Local businesses are welcoming the interest as well as the investment.
Are you seeing a shift? Are you seeing companies start to move here?
For sure. I'm seeing it in aerospace. I'm seeing it in other areas.
I have seen more people come to Puerto Rico in the last 2 years than I've seen in a long time. One of the biggest advantages of Act 20 and 22 is not even so much how many wealthy people come down, how much they spend, but it's putting Puerto Rico back on the map.
The area's new visibility has attracted a wide range of investors. At the high end is billionaire John Paulson, who has moved to the island and he's committed hundreds of millions of dollars to buy and remodel the historic Hidalgo Vanderbilt Resort.
He has a vision and he's willing to put his money where his vision is.
By all indications, Puerto Rican investors don't present competition from tax-advantaged outsiders. The capital they bring with them is simply too important.
The truth of the matter is, if we didn't have these laws, they wouldn't be here. And so they're only bringing incremental benefits to Puerto Rico.
What are our options? Having the real estate developments die and go away or crumble?
It's working. It's really working. We are receiving a lot of entrepreneurs that are partnering with our people, creating jobs, and we are really happy with the program.
Questions? Thank you.
Hello. Any incentives for leasing space that the government is giving for
What makes
people
the
that
CDC
want to
so
do
sure that it stops with this one individual?
like calling centers and things like that?
Well, some of that, of course, is the confidence the CDC has.
The answer is yes.
Protocols, public health and infrastructure.
Yes, and it depends. There's a couple of legislations that actually do that. There's, how do you call the one that rents it on for $1? Frankie Chéverez. Frankie Chéverez Act. Empleos Ahora, Employment Now Act. It provides for creating some businesses and leasing space from PRITCO at $1. PRITCO is a Puerto Rican Industrial Development Company.
West Africa
That's
is
where-
that a place like Dallas has the public health infrastructure to try and position to be able to isolate patients.
So you can get that. I mean, it's not leasing out private space, but you can get some space from PRITCO. There's a couple of catches on it. I mean, PRITCO is industrial. What they have right now available are old industrial facilities. They are a really large landowner down there. For industrial operations, it's really good. For some places where you need a warehouse, it's wonderful. They're brokering a building over in Atorrey, where Western Bank used to be. So they're brokering for that one. They are competitive in prices. I mean, so they are government owned and they're designed. I mean, their plan is to actually get tenants over there. So they are competitive.
Are there customs duties issues, shipping, assets, equipment, anything from here?
The question is whether there are custom duties issues into Puerto Rico. No, we are exactly inside CPB.
It's like another state.
It's like another state for those purposes. It's exactly like another state, and that's the thing about Puerto Rico. So for some situations, it's exactly like any other state. For some other situations, you're in a different country altogether. So you need to just be aware of which ones. There's sales and use taxes down there. You may have some sales and use tax issues on an import to Puerto Rico, but it's not customs. So it happens at the ports, but it's truly not a customs issue.
So once you bring your assets down, set up a factory, for example, and you want to take your materials and export them, what are the free trade partners, outside of CARICOM, or what other partners are out there?
Puerto Rican partners, you mean like
Free trade.
For free trade? We truly don't have any agreements that are standalone by themselves because we are covered by the U.S. treaties on commercial.
treaties that the U.S. has.
But Puerto Rico will be covered. The question is what trade partners does Puerto Rico have? And Puerto Rico, again, because of the peculiar situation, in most of the treaties, if not all, Puerto Rico will be covered as a state, and in the commercial treaties, it'll be a state. However, on my tax side, Puerto Rico is not covered on a tax standpoint in any treaty from the U.S., not a single one. The only treaty-like relationship that we have is with the U.S. through the mutual agreement process that I mentioned before. However, that may change. It's been supposed to be changing since 1991, and the Spanish U.S.-Spain treaty had like a provision saying in 91 that we need to fix this Puerto Rican issue at some point and get Puerto Rico covered over there with the treaty. That was in 91. In 2006, I sat at Treasury here in the U.S. actually pushing the whole thing forward, and they told me that since 91, we were the first ones to go over there to actually do something about it. But the new treaty that was signed, it's waiting to be ratified, by Congress here with Spain, it actually forces the issue. So if it gets ratified within 6 months after the treaty gets ratified, Puerto Rico will have to be covered by that treaty. And if that happens, I would assume that will start to be covered with the other, just turning into one of the model provisions for the other treaties. We're expecting that to happen.
I want to make a point, just having gone over with Carlos, and we had gone over with a business owner, and we also met with a fund manager, a hedge fund manager that manages some assets for our clients who made the move over there. Kind of from a logistical standpoint, if you have a business idea and you think this is something you want to look into, first thing is to schedule a visit over there and go meet some of the people from the government, and also, like Carlos's firm, for example. And PRIDCO will sit down with you and look at your business and say, okay, this is what we can do for you. This is the property that we have available. These are the tax incentives we have. There are hiring tax incentives. If you're going to go over there and hire 30 people for a call center, there's a financial incentive, a dollar payment attached to every one of those jobs, and it varies depending on the salaries involved and the skill levels involved. But PRIDCO will kind of guide you through what is available based on your idea. And then, Carlos can sit down and get into the nitty gritty of, all right, what is this going to look like from a tax standpoint? Where are the problems you might run into? How can you maybe change the way you're structuring it? Because a lot of times it can come down to maybe the way you're describing it. Maybe you're thinking of it as an import-export, but maybe it can be described as a service depending on the way that you.
That's absolutely right. And even last week at PRIDCO, they're going further than they have in some time. There was a company coming in, so they wanted to get some additional information, and PRIDCO arranged for 3 law firms, 3 accounting firms to go over there, and we had like a schedules of presentations for them to have options. I mean, so you sit down with them, and again, it's potential new investment over to the island, so it's more than welcome, I guess, on all ends.
The way you look at it really is the Puerto Rican government has its arms wide open. They want this to work. So what you need to do is make sure that the IRS is going to be comfortable with whatever it is you're proposing. But they're there to help you set something up that is going to meet the IRS's requirements, which is really what the rub is mostly about.
Yep.
Actually, I have a question. As far as built-in capital gains before you move, if you were to not recognize or realize those within the first 10 years, are you still subject to federal capital gain taxes?
I believe that you're not, that it would just simply go with the 5% tax that Puerto Rico would charge on that.
So basically, because you set up the portfolio, you can live with dividend interest income, and then start living with the capital gain 10 years after the fact, and then you're not subject to any federal income taxes.
That requires the issue that we talked about of domesticating the revenue streams from the dividend or interest from that portfolio. But it is possible. We need to set up some of the vehicles to make sure that happens. Yes, it is possible.
Okay.
Is the holding period of the appreciated property important, whether you've held it for 1 year or for 8 years? If you have an appreciated property of $100 and you sell it at $200 and you bought it at $10, does it matter whether you held it for 2 years or 5 years?
Long term is 1 year on both ends right now. It used to be 6 months in Puerto Rico. We changed it June of last year, June of this year.
Okay, because we had gotten some misinformation on that holding period being a percentage of the total. If you sold the gain within 9 months after.
Oh no, there's a formula from the U.S. perspective. That is true.
Oh, okay.
That is true.
It's the U.S.
Yeah.
perspective. Okay.
Yes.
And that's the question.
Exactly, and that's why I always stress that piece. One thing is looking at the Puerto Rican rules to see exactly what's happening in there, but that's half of the equation. You need to make sure that in any of these moves, and that's the way that I typically myself work at it, I sit down and just imagine that border that I mentioned in Puerto Rico. I take care of the Puerto Rican piece. We need to make sure that we partner all of the planning from a U.S. tax perspective as well. You need it to work from a U.S. tax perspective. And if you're planning on going truly international with the whole thing, you're dealing with 3 jurisdictions at the same time. So the spreadsheet gets a little bit more complicated with that. It is more than doable, but it is planning. It gets maybe a little bit more sophisticated that what happens if you're thinking of, I work in New York and I just want to move to New Jersey for tax reasons. People do that all the time, and they move to Nevada all the time. This is a little bit more complex because you're dealing international on the income tax side. Other than that, it's pretty much the same.
So if you've held the asset for 8 years in the US and you sell it within 2 years of Puerto Rico treats it one way, the IRS treats it a different way. How do you resolve those differences?
Puerto Rico will tax you on the capital gains, on the built-in gain piece that you have. Puerto Rico will tax you. The way that the law ended up
I
being
understand that
drafted,
part, but the IRS regs use that holding period.
you will use the U.S. rules to determine your gain, and when you have that, Puerto Rico sort of piggybacks into it and takes a chunk of it. That's truly the way to look at it.
Carlos, and you can correct me if I'm wrong. I don't know if we should generalize, but typically if it's a marketable security, the day that you move, you can clearly identify the value, right? When you
Correct.
move and when you sell. If it's not a marketable security, then you have to use the straight line method, and that's when the holding period
If it's a
comes into
company,
account.
if it's a sale of a company.
Of a privately held company.
Yes.
Correct.
Yeah.
Does that answer give you? Yeah.
Yeah, the bad answer, wrong answer.
Not the one you want to hear.
It's the real answer that you want to know now.
Yeah.
But that's truly the issue. You need to know the bad stuff now to avoid it. That's.
Sir, regarding your grant applications, is there a developing acceptance rate or targeting income level that you might expect to be accepted?
For 22 or 20? It's completely different requirements. 22 is the individual
Tell me
one.
both. Yeah, I mean, for 22, I guess, would be the real grant that they want to see. I understand from talking to other people, maybe there won't be an unlimited supply of grants.
Yeah, I mean, I have not seen a single issue with the Act 22 applications. Typically, the ones that have been shepherding down the door over at BRITCO, it's high net worth people that are out there.
For Act 22, you cannot have been a resident of Puerto Rico within the 15 years before the law was enacted, and then you need to meet the domicile requirements, but that's it.
So the requirements, in addition to that, I have not seen
No,
any of
there's
that
not.
stuff. People have
There's
some concerns with it, but it
I
hasn't
think it's
happened.
about a 9-month process, would you say?
It's
No,
supposed to go
no,
faster
for
than
Act,
that.
sorry, no, for Act 22, it takes 30 days.
Right. So I'm trying to develop a checklist for a client that's interested. He's actually lived there, not as a resident, but he's had a presence there for 3 years now, and brought this to me just a couple of months ago. And now he really would want to see the timeline on when he might be able to achieve that. And getting a grant might be the most problematical part of it. And that's the only part I really can't
Act
advise.
22 grants, which are the grants at the individual level, you just submit all the information. We try to make it fast, they take 30 days. Now, Act 20, because it's a company, it takes a longer time because we need to make sure that the service is an eligible service. And then we do different consultations within different agencies within the government, and that can take 6 months, 9 months, depending on how sophisticated, how complicated the business structure is.
But that's the business piece of it.
That's the business
Right.
piece. Does that answer your question?
Somewhat.
Somewhat?
I think to answer your question, or at least add to that a little bit, is that it is right now, there are not obstacles to it.
No.
And I would add too, I mean, it's important, not important, but, the attorney you're working with, being a competent and individual that has worked with this in the past, helps quite a bit in the Puerto Rican environment.
Right. Is that a necessity then? I guess it's a
Not
good
really.
question.
Not
That's
really.
where you make your money. There's a checklist, but the application is a significant effort.
In the Act 22 application, no. The Act 22 application is really straightforward. You can actually pull it off the web
Okay.
and fill it out yourself.
Yes.
That's truly very simple. The one that is, again, a little bit more complicated is with the business because you need to have some forecasts. That is a document that actually goes from BRITCO over to the Treasury Department, over to Economic Development. So a lot of people need to render reports on the qualification of the business itself, and you need to provide information on the business. So they truly make sure that it's there. It doesn't have, I got asked this actually last night, someone that's moving an operation down to Puerto Rico, getting both grants, the Act 20 and the Act 22. He was concerned with clawbacks and clawback provisions within the system. There truly are none Right now, typically, and each grant may be actually each grant is different. There's some boilerplates that will go in there. I have never seen a real clawback into the whole system unless two things. One, as part of your application process, you committed to X or Y activities. Yes, you will be held accountable to actually achieving those. And obviously, if you breach for some reason the grant, or you have some revocation issues with the grant, sure, all hell breaks loose, and you're going to be liable for taxes at that point. But it's not truly a clawback provision, and I have seen absolutely nothing of that in the 22 grants.
Any other question?
Bob, why don't you come up and say a few words, and thank you both.
Thank you.
I just want to take a second and thank Carlos and Mara for a great presentation. The more we learn about this, to be honest, the more we want to continue to educate the marketplace. So we started rolling out some of these little get-together events to kind of let the marketplace know what's out there. We believe truly that it's both timely and an intriguing tax opportunity for planning, and more of our clients are starting to look at it. So hopefully you found it of interest. If you need any additional information or have questions, you can feel free to either contact us, contact Patrick Foley, contact Carlos, and someone would get in touch with you and take care of that.
And we'll send you the presentation so you can mail them to the group.
That's perfect. That's perfect. So again, thanks for coming tonight. We appreciate it, and have a good evening.
Good.